Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst. Jumping to the charts on February 16th, it was a pretty wild action, a lot of volatility intraday as well. The markets initially gapped down intraday today. This is the cues we're looking at. That was the high pivot yesterday close. You closed very strong, only for market makers to gap us down today. And then look at this rally. 1, 2, 3, 4, 5, 6, 7, 8. 8 green 10-minute candles in a row. A massive, massive rally. What looked to be bullish consolidation all day was met by a last gas spell, which actually took you lower than the gap down. So why did the markets gap down in the first place? Because we got a whole host of bad economic data. PPI inflation upticked, and in terms of what that means, I saved that exclusive material for my members, but PPI upticking is not a good thing in short of it. We also received terrible, terrible manufacturing data. I won't dive into that too deep. And then we also received once again, hot, strong labor market data showing that the labor market is remaining very robust and resilient. So much of the data today that the market received was very, very detrimental and not certainly positive. Well, although the indices fell, the Nasdaq was down substantially. S&P was also down about 1.38% as seen by this daily reversal sell. It did come on a decent amount of volume, more than yesterday's. You can see the Q volume. The tech volume was upticking and starting to peak above average volume. So there is telling you that there is distribution occurring. Taking a look at the dollar, the Dixie's remaining very, very strong. This looks poised to break out. Once we clear this red bar reversal, it's going to be game on for the Dixie. Take a look at the long end yields, on watch for a breakout as well. This should be very, very negative for equities, but on watch for a breakout. Let's take a quick view of natural gas. Natural gas was under immense pressure today. It did finish down on the day, but it is still trading inside of this wedge pattern that we have discussed. Now, this wedge pattern could be shaping up for a potential reversal. We just have to wait for more data and see how the price action really shapes up. But this could be some sort of a potential falling wedge pattern that could reverse. Now, it is a little bit, could be also putting in a little bit of bearish consolidation on the daily. So we really want to start seeing it make a move up. And not break this little bit of a wedge pattern, or else it could trend lower. But clearly, it is still technically at support. You still are making on an hourly basis a series of higher lows over here. So as long as we don't start taking out these lows and really losing this pivot over here, natural gas could still continue to move up, but it's still remaining very, very weak. And there's a big, big seller still lurking, unloading this position, which makes me think that once it's fully unwind, once we have maybe a one more washout low, then we could eventually start to make a series of higher highs in the trend. But ultimately, very, very weak for natural gas. Taking a look at oil, oil's also under immense pressure, getting rejected and still trading above this resistance support, or this support line over here, which is now looking to be resistance, being the fact that you're closing below it. So energy is certainly under immense pressure, which should be signaling something for the overall economy. I think it's interesting to see that we saw finally tech reacting to the higher yields. In my mind, I do think that there's more downside for tech, even though it looks to be that you're putting in bullish consolidation. The important factor about tech and what's transpiring across the industry is we're starting to see sell signals occur in many of the larger cap names, mega cap names. Not all of them have put in sell signal. Apple has not put in a sell signal yet, but we'll touch base on this chart. Apple was on watch for a breakout. It made a new intraday high and then got reversed and slammed back down. Apple's on watch. This could have been the high pivot, and this could have been the retrace reversal candle. If Apple starts to close back inside this trend, it likely means you have a failed breakout and you could see Apple trade back to the low end of the range, or even have a failed bullish bull flag pattern that could break down. So Apple is certainly on watch, but the fact that it made a new high above yesterday's high pretty convincingly, and then it just had a last late minute sell in the last 2 hours and reversed down, potentially putting in this reversal candle over here on the daily chart on volume, certainly is not a positive sign for Apple. It's still one of the more extended charts, but until Apple puts in a topping signal, these markets could trend higher, but it's looking likely with this distribution that just occurred today that Apple could be on the verge of that technical sell signal like a variety of the other caps that we have touched base on. So certainly there's lots to watch and keep an eye on. We're going to be making and executing trades like we have continued to do in the live day trading room and swing trading room. Let's just quickly touch base on Bitcoin, because Bitcoin had a phenomenal move. Bitcoin finally tagged the 25,000. In my mind, the upside bias is now complete. I think this rally came on the back that people were waiting for a breakdown in the trend of Bitcoin to happen. You got it on this move. It looked like you're putting in bearish consolidation up until you got this daily bottoming tail over here, and then a big pop off of that level. But Bitcoin is now under pressure on the daily chart. It is putting a reversal signal on volume at some key resistance. Notice if I scroll all the way down, look where we're trading. This is a massive trend line from 2018, connecting your breakdown in COVID, this one-off event, to a pivot low all the way here in your summer, June of 2022. And you're also trading at the top of this range where you've connected multiple pivots many times on the high end and on the low end of the range. So you're at resistance. Do we get a daily topping tail? It's looking likely. So far it is. If Bitcoin reverses, and especially if Bitcoin closes back inside this and doesn't confirm this breakout, it likely means that Bitcoin has had now a failed breakout, just like the Apple chart. So I'm still in the camp we see more downside. I think this was the last hoorah gas for Bitcoin. And if you look on the larger term timeframes, Bitcoin had that death cross that occurred, which I think is why people started jumping on the bandwagon for Bitcoin. But the ultimate trend, now that Bitcoin has had that weekly death cross with the 50 and the 200, and the fact that we've never seen that, if we start trading below this 200, it's eventually going to start sloping down. And being the fact that you now have the 100 sloping down in this nature, you can see this 100 trend is rolling over. You also have the 50 sloping down. The moving averages, the long-term moving averages are telling us something, and you just better be listening for that matter. Unless central banks start printing exorbitant amounts of money in the next week or two, it's likely that Bitcoin sees sell-side pressure, which is what is the market is saying based off of the yield movements. And really where risk assets should be trading right now is a lot lower just in comparison to the recent rally that it has had. I'm a Bitcoin bull over the long term. Obviously, I want to accumulate Bitcoin, so I'm hoping it goes lower. But in terms of this price level and where the economy is and the macroeconomic landscapes of yields and inflation and where the Fed's policy is, right now it's not a time for myself to be long Bitcoin. But there will be a time, just like there is a time for every asset to be long. Another chart that I want to bring to your attention is JNJ. Johnson & Johnson is the second largest or the first large one, number one and number two in the XLV ETF, the healthcare ETF. Johnson & Johnson just triggered this big weekly, it triggered on the daily chart. You have not triggered on the weekly, but it's on watch for a weekly breakdown of this M-top pattern. If Johnson & Johnson triggers this pattern on the weekly, which you just confirmed it on the daily, it's showing that there's a lot more downside ahead for Johnson & Johnson, which actually could take you down to 134. Now, in my mind, it's like, what is this pattern telling us? One of the largest healthcare stocks, one of the most blue chip companies that you can trade, is now triggering a pattern that can take you down to 134, basically implying a drop of 14%. That's an incredible reevaluation of this asset, and the technicals are certainly showing that there's a lot of weakness. Now, you are getting oversold in the short term, so there is potentially a bounce play coming up. I want to see it trade a little bit lower before I consider going long for a day trade, but you are getting oversold, so you're looking for a potential retrace short. If this pattern triggers on the weekly, my expectation for the trade is to look for a retrace back to this original trend line to start accumulating a short, and then hopefully you get a little bit of bearish consolidation off of that level and then another move down. So that's kind of my expectations, is look for this pattern to hold below this white trend line. Let me just remove this X here. Let me just remove this. So look for this pattern to really hold below this white trend line over here. And then if you get bearish consolidation underneath that trend line, that is a slam dunk or a layup of a short that could take you at least down to this 200 weekly before you get your next bounce, and eventually all the way down to the downside pattern measured move of 135, give or take a few dollars. So lots of interesting stocks are speaking to us and telling us something is on the horizon. It's just a matter of us to interpret the data, and that's all we're here to do, is interpret the data. But after today's price action, it was extremely negative for stocks, and I do think that there's actually more to come based off of where interest rates are now trading, based off of where the dollar is trading as well, and based off of where the S&P and equity markets are trading. I mean, it's very rare to see the spiders diverge from, say, TLT. I mean, if you take a look at TLT, TLT's been decimated. If you take this percentage move from the high down to where we're down, TLT, the bond market, has lost 7.3%. And we're talking about a bond market that's about 100 trillion deep. Whereas the stock market, I'm not too sure what the market cap is. I think it's around 40 trillion right now, give or take a few. But the bond market's lost 7%. The stock market S&P has lost 2.4. So let's just assume that we lose 7% like the bond market, which is a very plausible scenario. Look where it takes you right back down to. Basically the low end of this parallel channel. Also this wide range red bar, a pierce of the daily 200, right back into this pretty much this consolidation area before you broke out. So lots of things to consider as we move forward. Obviously, there's lots of support levels. The markets don't just go straight down in a straight line, although they did kind of just go straight up here. Not much consolidation. Now, I do think we're going to see the pendulum swing pretty hard here, but I do think that it's not going to be an easy road for the rest of this week, being the fact that options X, there's trillions of dollars on the line that could be changing hands. So we just have to be mindful of that. On that note, please definitely subscribe to our channel if you want to see and continue to follow what trade alerts we put out. Visit our website at tradingcapital.ca to really become an exclusive member to see how we trade, see our positions from everything from buy, sell, short, stop loss, and everything else in between. Other than that, if you enjoyed this content, we just continue to try to put out educational material. We will be going live tomorrow again on our at TC Live channel to watch the day trading session and trade in the mornings. So feel free to join that service. It is complimentary at the moment, as we're still trying to gain a little bit of a subscriber base on the live side of the channel. It is a little bit more of a niche market, but nonetheless, it's one that will likely also benefit those traders that want to see intraday movements as more as opposed to this daily chart analysis. On that note, I'm going to bid you farewell, and we will see you on the charts tomorrow. Take care, everybody.